Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Yesterday, the Australian Bureau of Statistics released its labour force report for May. Registering an increase of 42,300 jobs in total employment, the market actually ended somewhat mixed. The unemployment rate also missed its forecast by 5.1% and remained unchanged at 5.2%. In the data released, many of the jobs created were part-time roles, around 39,800, with only full-time jobs at 2,400, which is quite a difference. The RBA believes that the economy can sustain at an unemployment rate of 4.5. Because of this, the market is still pricing in a possible rate cut, not in August, but in July, due to the fact that the figures coming out were quite somewhat mixed, but poor when it comes to the unemployment rate. Looking at the technical implications, they are bearish, and they are marrying up near enough to the RSI to the MACD. At present, I view a target of 68.95, but do expect to see the market lower to 68 cents. Any advances should find resistance now from 69.5 to 69.85. Well, at present, we're still maintaining quite negative for the euro since the bearish outside range day, but we're still waiting for the cut. This is at 112.70, which is nearly upon it now. Looking at the dollar index, that ended pretty flat, but still also waits for the bullish outside range day to be confirmed to get the trigger up for at least 100 points. In light of the pattern, I do expect to see the euro break down. If so, sub 112.70 will bring in a target of 111.60. Any advances should still find resistance from 113.45 to 113.90. For 10 consecutive days, dollar yen hasn't traded hardly anywhere and locked in the surroundings of 107.85 to 108.70.95. As this market continues, the technicals are breaking down, so that means yen could strengthen and therefore could see a move beneath 107.85 and down towards the region of 106.5. What also has come to light is that the yen strength may increase due to the geopolitical risks that further reports of 2 oil tankers were attacked and left adrift in the Gulf of Oman. State Secretary Mike Pompeo on Thursday blamed Iran for the attacks. So this has increased somewhat some yen strength. So keep an eye on that if you're trading from the long side, because you may need to change your view in terms of the bullish case. And also, talking of the bullish case, the pound is still failing towards that level of 127.60. Now, a break beneath the level coming in now at support at 126.50 would give further scope to the downside to a target around 125.20. But still, the market's contained by the top side and the pressure is coming back from the technical point. I'm looking at the weekly for the gold here because we've got another surge overnight from 32 up to 43 high. And now this morning posting a fresh high coming in at 44. A close above here in New York of 43, that is, even though we are above it just, is that we could be looking up towards the region of 1,350 to 65, where I've outlined here in February and April 2018. The bulls are still very strong and from a technical point still holding the case to the upside. Support seen at 1,338. And wrapping up with oil, well, the market, because of the situation of the tankers being attacked overnight, has put a bit of momentum back into the market. And after losing 4%, near enough recovered 4% overnight, but ended just up 2%. From the technical point, though, that we are looking back towards 53.70 to about 54 to 55. And the recent rally has somewhat eased the pressure off that 50 level. I only turn bearish if we go sub 50, as this would give an exposure to $45 as a target. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday poll. And I hope you enjoyed this day and a great start to the new weekend.